Hi everyone. Today we'll be going over accounts 2021 May June paper 2 question number 4. This is a structured paper 2 which has the total marks of 90 and also has a time limit of 90 minutes. And since question number 4 is of 30 marks, we will be attempting to solve this question under 30 minutes. So without any delay, let's get started. We are given T Limited, which manufactures goods at two factories, so factory A and factory B. We are given information relating to factory A. It has two production departments, assembly and finishing, and two service departments, administration and canteen. Absorption costing is used at this factory, and budgeted overheads for February 2021 have already been apportioned. Now, the basis for reapportioning the service department overheads here is as follows. So we're given two service departments, administration and canteen. So the basis for reapportioning the canteen's overhead is to give 50% to assembly department, 40% to finishing department, 10% to administration department. And then to reapportion the administration overheads, we will be providing 75% of it to the assembly department and 25% of it to the finishing department. Now we are required to prepare a statement showing the reapportionment of service department overheads for February 2021. So we will first reapportion the overheads relating to canteen. And for the canteen, 50% goes to the assembly department. So 50% of 15,400 will go to the assembly department. Let's calculate it first. So that's going to be 15,400. 50% of it can be denoted by multiplying with 0.50, which gives us the reapportionment amount to be 7,700. Let's write that down. Nextly, finishing department consists 40%. So that's going to be 15,400 into 0.40, which gives the reapportionment amount to be 6,160. Let's write that down as well. Then administration department gets 10%, so that's going to be 15,400 into 0.10, which gives the reapportionment amount to be 1,540. Let's write that down. So while reapportioning this amount, we need to subtract this exact same amount from the canteen department, right? So we will just write the same amount, but in a bracket, denoting that we need to subtract this amount. Now let's calculate the subtotals. So for subtotals, we just need to add these two amounts. So for assembly department, that's going to be 83,500 plus 7,700, which gives the subtotal to be 91,200. For finishing department, that's going to be 70,100 plus 6,160. Subtotal is going to be 76,260. For administration department, that's 28,300 plus 1,540, which gives the subtotal to be 29,840. For canteen department, that's 15,400 minus 15,400. So there is no overheads remaining for the canteen department. Now we need to reapportion the administration overheads to assembly and finishing departments. We already know that the 75% is apportioned to the assembly department. So in order to calculate that, we can just multiply the subtotal for administrative department, which is 29,840 with 75%, which can also be written as 0.75. This gives us the reapportionment amount to be 22,380. Let's write that down. And for the finishing department, that's going to be 25%. So we can calculate it by multiplying the total 29,840 with 0.25. This gives the reapportionment amount to be 7,460. Let's write that down. And since we're apportioning this amount to the production departments, we need to subtract this exact same amount from the administration department now. So that's going to be 29,840, but in a bracket to denote that we need to subtract this amount. Now, in order to calculate the total overheads, we will just add the subtotal amount and the reapportionment of administration department. So for assembly department, that's going to be 91,200 plus 22,300, and this was supposed to be 80. Alright, so it's going to be 91,200 plus 22,380, which gives the total to be 113,580. For finishing department, that's going to be 76,260 plus 7,460, which gives the total overheads to be 83,720. This completes the first part. Let's move on to the second one. We're given the additional information relating to the production departments. We're given direct labor hours per month, machine hours per month, and direct labor rate per hour. We need to calculate the overhead absorption rate for each production department to two decimal places. So the most important thing to notice here is that in assembly department, we are using majorly the machine hours because machine hours is greater than the direct labor hours, right? So the overhead absorption rate for assembly department is going to be per machine hour. But if you look at the finishing department, we can clearly see that the direct labor hours is greater than the machine hours, which means that the overhead absorption rate for finishing department will be based on labor hour. All right. Now, in order to calculate the assembly department, we already figured it out to be based on the machine hours. So we need the total overheads that we calculated in the first part, which was 113,580. So that's the total overhead, and we will divide it by the machine hours per month. So that's just going to be 113,580 divided by the machine hours. So machine hours is 2,800. Now this gives us the overhead absorption rate of 40.56 because we were told that we only need two decimal places. 40.56, but we also need to write per machine hour because we are calculating it by dividing with the total machine hours. So this will be the overhead absorption rate for assembly department. Let's just repeat the process for finishing department as well. Again, we need to just substitute the value for the total overheads that we calculated in the first part. That was 83,720. And since we already figured it out to be based on the direct labor hours, we need to divide it with the total direct labor hours per month, which is 1,400. Let's do that. Now this gives us 59.80. And we also need to write per labor hour. This is the overhead absorption rate for finishing department. This concludes the second part. Let's move on to the third one. We're given additional information relating to an order received from a customer, and we're given the following details relating to direct material, direct labor, and machine hours. And the company's policy is to achieve a profit of 40% on selling price. All right, we need to prepare a statement to show the total selling price that T Limited will quote to the customer. Now, in order to figure out the total selling price, we first need to figure out the total cost, right? So we will be working towards calculating the total cost first. We can just prepare a statement. We will start with the direct materials. So direct material is already given right here to be 1,880. We will just substitute this value. Then we're given the direct labor for assembly department and finishing department, and we are given the machine hours for assembly department and finishing department. Now we can just categorize these into two different sections. The first one will be direct labor used by both the assembly department and the finishing department. Let's calculate it first. So we can just write the heading to be direct labor. And we will first calculate the direct labor amount for assembly department. So for assembly department, the direct labor hours is going to be 11.5. Now we need to figure out the direct labor rate for the assembly department, which is given above right here, direct labor rate per month. For assembly department, that's 8.40, so we will just multiply the total hours of 11.5 with the rate of 8.40. So that's just going to be 8.40. This gives us the direct labor cost for the assembly department to be 96.6. Now we repeat the same process for finishing department. Alright, for finishing department, the given direct labor hour is 6.1, and we will just multiply it with the direct labor hour rate given above. Let's have a look. So it was given at 8.20, so we will just multiply the total hours of 6.1 with this rate of 8.20. Let's do that. This gives the direct labor cost for finishing department to be 50.02. Now we can move on to the overhead section. So overheads will relate to what we calculated the overhead absorption rate in the second part. Now firstly, we'll calculate it for the assembly department. While figuring out the overhead absorption rate, we calculated it for assembly department on the basis of machine hours, right? So we will also use the total machine hours here in order to figure out the total cost. So total machine hours for assembly department is 5.7. Let's write that down. And we figured out the overhead absorption rate in the second part. Let's have a look. It was 40.56 per machine hour. Because it was per machine hour, we have to multiply it with the total machine hour, which we just wrote down as 5.7. Now we will multiply it with the rate of 40.56. Let's do that. This gives us the total overheads for our assembly department to be 231.19. We'll be repeating the same process for finishing department. Now, while calculating the overhead absorption rate for finishing department, we calculated it on the basis of labor hours. So we need to write down the labor hour over here. The direct labor hour was 6.1. So we'll just substitute this value and we will be completing ignoring the machine hours. Now let's just substitute the rate that we calculated in the second part, which was 59.80. Again, because this is per labor hour, we'll be using the direct labor hours of 6.1 and not the machine hour. We will be completing ignoring the machine hour for finishing department. Let's just multiply it with the rate of 59.80. This gives us the total overheads for finishing department to be 364.78. Alright, this concludes all of the costs. Now let's just add it in order to figure out the total cost. So total cost is going to be 1,880 plus 96.6 plus 50.02 plus 231.19 plus 364.78, which gives 2,622.59. Now we need to add the profit. And after adding the profit, we can figure out the total selling price. Now, an additional information that we were given right here is that company is to achieve a profit of 40% on selling price, which means that the total profit is going to be 40% of total selling price. Now, I'm going to solve this in a form of an equation. All right, so that's just going to be total cost plus profit is going to give the total selling price. And we already know the value for the total cost to be 2,622.59. For the profit, we know it to be 40% of the selling price, so we can just write it as 0.40 into selling price. And I'm going to denote the selling price with SP. So this is just going to be SP as well. Now this is a simple equation. We can easily figure out the value for the SP. So that's going to be 2,622.59 equals to, if you bring this to the other side, that's just going to be 1 minus 0.40 into SP, which gives 0.60 into SP. Now the selling price is just going to be 2,622.59 divided by 0.60, which gives the selling price to be 4,370.98. So we already have the selling price for 370.98. Now in order to figure out the profit, we can just subtract the total cost from the total selling price. So that's going to be 4,370.98 minus 2,622.59, which gives the profit to be 1,748.39. This concludes the third part. Let's move on to the fourth one. We need to state two possible causes of underabsorption of overheads. So for the causes of whether it be underabsorption or overabsorption, we can actually look at it in two different ways. Firstly, we can look at it from the overheads, and secondly, will be on the basis of production. So we're talking about under-absorption. So one case for the overhead is that whenever the actual overheads are greater than budgeted overheads, then it results in the under-absorption of overheads. Let's write that condition down. So actual overheads is greater than budgeted overheads. That is the first cause, and the second cause will be on the basis of production. So overheads in production, there's always an opposite relation. So if the actual overhead is greater than budgeted overheads results in the under-absorption, then the actual production less than budgeted production will result in under-absorption. So the second condition is just going to be actual production is less than the budgeted production. Now this concludes the fourth part. Let's move on to the fifth one. We need to state what is meant by allocation of overheads. So overheads are allocated where they can be directly attributed to a cost center, right? So let's write that down. Overheads are allocated where they can be directly attributed to a cost center. So if we were to take an example of this question, when we were given the overheads for 4 different departments, 2 production and 2 service department, those are the allocation of overheads. Now second part is that the apportionment of overheads. So overheads are apportioned where it is necessary to divide costs between cost centers on some appropriate basis. Again, relating to this question, we apportioned the cost from the service departments to the production department on the basis of percentages that were given in the question. So that will be the apportionment. Let's write that down. Overheads are apportioned where it is necessary to divide costs between cost centers on some appropriate basis. All right, this concludes the fifth part. Let's move on to the sixth one. So we're given additional information relating to factory B. So whatever questions we did before this were relating to factory A. Now T Limited manufactures a single product in factory B, and marginal costing is used at this factory. So previously we were using absorption costing. We are then given the information available for December 2020 when production was 9,000 units, which included 1,000 units produced using overtime. So using the normal time, 8,000 units were produced, and then 1,000 units were produced, which were done on the basis of overtime. All right, we're given the cost relating to these 9,000 units, direct materials, direct labor, variable cost, fixed cost, and the resulting total cost. Now we're given that the direct labor overtime is paid at 1.25 times the normal rate. So normally what we paid for 8,000 units, maybe that's X. For the remaining 1,000 units, we were given 1.25X because of the overtime rates. And all production was sold at $30 per unit. So that's the sales price. Now, the directors have been considering changing the supplier of materials. The following information is available. So an overseas supplier is prepared to become the company's sole supplier of materials at 5.50 per unit. So previously, let's figure out the direct materials rate in the previous scenario, this scenario. So we're producing 9,000 units. That's going to be 9,000 into direct materials per unit, which gives the total to be 72,000, which is given right here. So this gives us the direct material per unit to be 72,000 divided by 9,000, which is going to be 8.00. So previously we paid $8 per unit, but this time the supplier will give us the raw materials or direct materials at the rate of 5.50, which is a reduction in cost. Secondly, the supplier can only provide sufficient materials for the company to make 7,600 units per month. Alright, so previously we were talking about 9,000, but we have to cut down the total output to 7,600 now. And the directors do not expect any other costs or the unit selling price to change. So the unit selling price will remain at $30, and there will be no extra cost other than these given right here. And all production will be sold. So our assumption is that all 7,600 units will be produced and sold as well. Now let's have a look at the question. We need to calculate the maximum profit per month that can be made if materials were obtained from the overseas supplier and production limited to 7,600 units. We could have easily done this, but we first need to figure out the direct labor rate and then other variable costs per unit rate as well. So let's just figure out the direct labor rate first. Now for the direct labor rate, we know that for 8,000 units, the normal rate was paid. So that's going to be 8,000 into, let's denote the normal rate with DL per unit. Then for the remaining 1,000 units, they were paid in overtime rate, which is 1.25 times the normal rate. So we can just write it down as 1.25 into DL. Now this gives the total direct labor cost to be 74,000, which is given right here in the question. Now we can easily figure out the direct labor hour rate. Let's do that first. So taking the direct labor rate common, we can just write it down as 8,000 plus 1,000 into 1.25. This will have the total value of 74,000. Now we can easily figure out the direct labor per unit to be 74,000 divided by 8,000 plus 1,000 into 1.25. This gives us the direct labor rate to be $8. Now lastly, we also need to figure out the variable cost per unit. So the total variable cost is given to be 22,500. Let's figure it out per unit. That's just going to be 9,000 into variable cost per unit. That has a total value of 22,500. Now we can easily figure out the variable cost per unit to be 22,500 divided by 9,000, which gives the per unit variable cost to be 2.50. Alright, now we can work on our question. So in order to figure out the maximum profit per month, we will just reduce all of the costs from the total revenue. Now let's figure out the value for the revenue. We were told that 7,600 units will be produced and sold. And the selling price is to remain constant at the price of 30, as given in the question. So the total revenue will be 228,000. So now we subtract the direct costs first. The first direct cost can be direct material. We figured out the direct material rate in the previous scenario to be 8, but now we will be obtaining the materials from overseas supplier at the rate of 5.50 per unit. So that's just going to be total units into the rate per unit. This gives us the total direct material to be 41,800. The next direct cost can be that of direct labor. We already figured out the direct labor rate per unit to be $8. So that's just going to be total units into per unit rate, which gives the total direct labor to be 60,800. Another would be variable cost. Again, we figured out the variable cost per unit to be 2.50. So let's just multiply it with the total number of outputs, which gives us the variable cost to be 19,000. Now we can figure out the total contribution. In order to do so, we reduce all of the direct costs from the revenue. So that's just going to be 228,000 minus 41,800 minus 60,800 minus 19,000. That will be 106,400. Now we can just subtract the fixed cost. Fixed cost will remain unchanged because it does not change with the level of production. So the given fixed cost is 65,000. We will just substitute this value in our solution. So that's going to be 65,000. Now subtracting it from the contribution, we will get the profit for the month. So the profit for the month is going to be 106,400 minus 65,000, which will be 41,400. This concludes the sixth part. Let's move on to the seventh one. Now we need to advise the directors whether or not they should change the supplier. We need to justify our advice by considering both the financial and non-financial factors. So firstly, we already have the profit for the scenario when we buy from an overseas supplier, but let's figure out the profit when we continue this same process given in the question. So the cost is 233,500. Then let's figure out the revenue. We were told that 9,000 units were produced and sold. So that's just going to be 9,000 into 30. This gives the revenue to have the value of 270,000. Now we can easily figure out the profit. We just reduce the total cost from revenue. That's going to be 270,000 minus 233,500, which gives us the profit to be 36,500. All right. So firstly, we can say that the profit is definitely increased from 36,500 to 41,400. Let's write that down. So profit will increase from 36,500 to 41,400 if the materials are bought from overseas supplier. Nextly, while changing the supplier, we will be buying from a sole single overseas supplier. So we do not have to maintain relationship with numerous suppliers, right? So that can be an advantage. So can maintain better relationship with a single supplier. All right, nextly, we will only be producing 7,600 units if considering an overseas supplier, right? While continuing our current process, we have to use overtime labor, but that is not the case for the overseas supplier because we do not need any overtime, which might reduce the cost. That can be an advantage as well. So no overtime required. Which might reduce the costs. All right, nextly, we do not know whether this overseas supplier is reliable or not. So that's still a question. Will the overseas supplier be reliable? And we're talking about an overseas supplier, meaning that that's from outside of the country. So can there be any sort of supply problems? We do not know that yet, right? So that can be a major disadvantage. So delivery is done from overseas. Will there be any supply problems? Nextly, we are reducing the number of outputs if we are considering the overseas supplier, because previously we had been producing 9,000 units, but with the overseas supplier we can only produce 7,600 units. So this reduction in total output might lead to possible reduction in customers as well, right? Because we might not be able to reach the demand. So that can be a disadvantage as well. So reduction in total output, which might lead to possible reduction in customers. All right, now we have to make a decision. So considering all these points, we can definitely see that the profit has increased from 36,500 to 41,400. But we still do not know whether the supplier is reliable, whether there will be additional problems during delivery due to the supplier being based on overseas, and there might be a possible reduction in customers as well. So due to these reasons, I will be making a decision not to change the supplier. Let's write that down clearly. So decision will be that the directors should not change the supplier. All right. This concludes the 7th part as well as this question. So if you found this video useful, make sure you leave a like and leave a comment below. And make sure to subscribe and hit the bell icon so you do not miss any of these videos in the future. Thank you.